The other big story that continues to develop on our watch is Fannie Mae and Freddie Mac and all the big economic minds meeting in Jackson Hole, Wyoming. So let's talk about the Fed and get our rodeo on that front going. Joining us now, former Federal Reserve Board Governor Lyle Gramley, former Dallas Federal Reserve President Bob McTeer, CNBC's Rick Santelli, and Steve Leisman is with us as well. Steve, I'll start with you if I could. What's the buzz out there? Fannie and Freddie are now positive on the trading session.
Yeah, I don't think anybody's buzzing about the positive share price of Fannie Mae and Freddie Mac. I think they look at this and they see that this is pretty much the way things are going and have been going in the credit crunch. The equity gets stomped on, and the question is what you do with the debt. So far, the government's decision has been basically to backstop the debt. But if I could for a second, I want to bring up one of the best comments from last year's conference here, which I think is going to be one of the big questions right now. It was a guy, Mike Musa, and we called it bon appetit. And what he said is there are lots of investors who invested in a leveraged basis in high-risk assets. They're going to have to eat substantial losses, and some of their creditors will have to eat. And as far as I'm concerned, the proper public policy response to that is bon appetit.
Yep.
I think we're going to be talking about what particular meal both equity investors and credit investors ought to be eating in the next couple months.
Lyle Gramley, as they sit out there in Jackson Hole, they got to be thinking, here it is 1 year later, and the credit crunch is full on, nearly just as bad as it was back then.
It certainly has shown no signs of getting any better. And I think when you look at what's happening to Fannie and Freddie, if we thought we were at the bottom in home prices, we wouldn't be worrying all that much about Fannie and Freddie. But if home prices are going to continue to decline, let's say another 10 to 15%, then you have to ask yourself whether or not we're not facing another wave of asset write-downs. And if we are, then bank credit is going to begin to contract. Banks are going to tighten their lending standards still further, and we could have a credit noose around the economy's throat.
Bob McTeer, do you think that indeed we are looking at that other shoe that might be dropping right now as we look at the credit markets?
I hope not, but it is very dangerous. I don't understand quite why, because I don't know of anything wrong Freddie and Fannie did to deserve this. Let me make one point that I haven't heard made.
Controversial. The way that they are constructed has been controversial, Bob, for a long, long time.
For years, but what's different about the last month? I don't know what it would be. One point, though, I'd like to make is.
Go ahead, Bob.
Let me make a point here. If they are nationalized and the government runs them for 2 or 3 years, interest rates are going to be lower probably than they have been, and the public is going to love it. It's going to become an entitlement, and they will never be reprivatized. So I think it'd be very dangerous for the government to go down that road.
Very interesting. Steve, go ahead.
Yeah, I was just going to make, I think that's probably the way things are going to go. I think Bob sees what's happening right now, and it's probably likely that's going to happen. What has happened in the past month, I mean, I'm almost as amazed as Bob is that the equity markets have really tried to keep putting the better gloss on this credit crunch over the entire time. While credit markets are melting down, equity markets have been sort of flat to even up for part of it, and right now what's happened, I think, in the last month is a recognition that you cannot support a case for the equity of Fannie Mae and Freddie Mac. I remain to be convinced if any member of this panel wants to step up and tell me why I should take a position in the equity side of Fannie Mae and Freddie Mac, I'm ready to write it.
Hold on, guys. The other huge news today is this price of oil skyrocketing $6 just when we thought the Fed had some some breathing room when it came to the inflation front. It looks like it's disappearing on them, Rick Santelli.
You know what? It's not. Listen, the markets always penalize in the most efficient way. That's the oldest axiom to trading. And if the country is held hostage to a short position in oil, it's going higher, anecdotal or not. Now, here's my point, Steve Leisman. Listen, if you can borrow at 4% and you adopt me and I have bad credit and I can only borrow at 8% and then you co-sign for me, what should my rate do?
What do you think, Steve?
Go up.
my rate should go up, my rate should go down if you're co-signing for me and you have a big balance sheet. I think that the best trade out there, and this is going to sound crazy, there is a place where you buy the mortgage paper and sell treasuries. That spread should be narrowing. And second of all these new homes that our esteemed guests are talking to, what happens with them, that's still in the kitchen being prepared. The Bon Appetit issue is the issue that's important. What's already been on our plate for a year needs to be digested. They need to make unrealized losses real.
Okay, on that note, gentlemen, thank you all very much. Appreciate it.